So we go to South Africa now. This week, we've had a lot of stories coming from South Africa, from the Moody's credit rating, which says that inflation will hit 10% this year in South Africa. And, we have joining us now from London to discuss the outlook for South African economy, Matt Kendiga, practice lead, Sub-Saharan Africa Front of View. He has his eyes on South Africa, and he's telling us how this projection goes, or how if South Africa can escape it. Hi, Matt. Good afternoon. Good to have you on.
Hi, good afternoon. Thanks for having me on the show.
Great. So given the weak recent data, what's your outlook for industrial activity in South Africa? I know the PMI came out and it didn't look so good, so it was a drop from 60 to 50 points.
Yes, that's right. So PMI, especially manufacturing PMI in South Africa, was actually improving quite significantly over the last couple of months. The industrial sectors in South Africa, manufacturing, mining, were gathering momentum, and we have seen quite a significant reversal over the last month or so. And this is really mainly a direct result of the quite dramatic floods that we saw in KwaZulu-Natal over the last month or so, specifically in the Durban area. There has been significant disruption to port activity in Durban. Durban is South Africa's most important import and export port, and a lot of export-orientated companies have struggled to get their goods out of the country, but also a lot of components that are used in industrial processes have been held up at sea because the port has been out of action. So that's really one of the factors. The other factor is that power shortages have weighed on production as well. And in terms of the outlook, it's a bit of a mixed picture for South Africa's industrial activity in particular. So the floods aren't likely to have a long-term impact on industrial activity in South Africa. We expect a relatively quick recovery, probably by the third quarter this year, so over the next couple of months. And we're also going to see very high commodity prices support activity in some industries, such as mining. So certainly there are a couple of positive drivers for industrial activity, but there are a few things that will contain the sector's prospects. Notably, we're going to see quite weak export demand for some of South Africa's key exports. So, for example, the automotive industry in South Africa, very dependent on consumer sentiment in Europe, exports a lot to Europe. We're going to see a slowdown in consumer spending in Europe this year, and this will weigh on South Africa's automotive exports. We're also going to see continued problems with power shortages in South Africa, and this will continue to undermine productivity and raise costs for the industry. So there are a couple of things that will weigh on the outlook for industrial activity for sure.
Yeah, and looking at from Moody's eyes, do you see what Moody's sees when it comes to inflation?
Yeah, so this is quite an interesting development today. They expect, I believe, an average annual inflation rate of about 8%. For South Africa in 2022, we are forecasting 7.5% as an annual average this year, which will be the highest rate since at least 2008. So South Africa has enjoyed more than a decade of quite low inflation. We expect the inflation rate to well exceed the government's upper limit of 6%, especially in the second half of the year. We could see the inflation rate peak in Q3 or Q4 at over 10% year on year. And this is being driven by very high fuel prices. We are expecting global oil prices to remain close to or above $100 a barrel for the rest of the year. But South Africa also is very exposed to high global agriculture prices. We're probably going to see a bit of a spike in agriculture commodity prices and therefore food prices in South Africa also towards the end of this year. And in South Africa's case, quite uniquely, Eskom, the state utility or energy utility, is really desperate for extra funding. And so as a result, it is raising electricity tariffs, even though there are electricity shortages in the country. This will also be a significant contributor to higher inflation in South Africa over the course of 2022.
So how should the government and the central bank be responding to these forecasts?
Yeah, certainly. So in terms of industrial activity, so the government is very aware of the constraints on the industrial sector. We've seen a couple of things already take place. So an expansion of the role of independent power producers to allow big industrial companies to generate their own electricity. We're already seeing this occur in the mining industry. We're probably going to see more manufacturing subsectors also invest in independent power production. The government's also prioritizing in its budget over the next year investment in infrastructure, especially transport infrastructure and railway infrastructure. So we're certainly going to see a bit of a helping hand from the government in that regard. But from an inflation perspective, so the government's hands from a fiscal perspective are quite tied. It has very limited tools to contain cost pressures in terms of using extra subsidies or tax cuts. And this is because the government has a very strict goal of cutting its budget deficit and public levels of public debt by the middle of this decade. So we don't see a significant rollout of new subsidies, for example. But from the South African Reserve Bank's perspective, we certainly are expecting more interest rate hikes over the next few months and throughout the rest of this year. And this is because the rand has lost a fair amount of value against the dollar over the last couple of weeks, partly as a result of the Fed increasing its interest rate by quite a substantial amount in the US over the last couple of weeks. But we're also likely to see the independence of the central bank mean that it will be forced to revisit its remit of pulling down the inflation rate in South Africa. So certainly we are expecting much tighter monetary policy over the next couple of months, and that could contribute to a slowing of inflation towards the end of the year and the beginning of next year.
All right, Matt, thank you so much for giving us your perspective on the South African economy. Do enjoy your weekend.
Thanks, you too.